Welcome to this week's video where I discuss what I believe individual investors should be considering over the next 5 to 10 business days. I'm going to address Fed speak, what the Federal Reserve said this past week, how it affected the markets, and how I think it'll affect markets going forward. Buy the dips. Is it still an effective strategy? And lastly, the inflationary trade. A lot of people talking about adding inflationary type investments to their portfolio to combat the inflation. Can these still work, and do I recommend them at this point? The Federal Reserve met this past week, and interesting enough, they still maintain their current stance. They don't believe they're going to have to increase interest rates, at least in the near term. However, interesting enough, some of the people on the Federal Reserve have actually indicated that they could see the Federal Reserve raising interest rates as soon as 2022. For the most part, we don't believe rates will rise until 2023, but overall the market took this as perhaps the era for shorter or lower rates for longer is about to come to an end over the next 6 to 12 months. I've always maintained that the Federal Reserve will raise interest rates, and I believe it'll be a lot sooner than they've actually discussed. So the market sold off late last week. I think the market is a little bit choppy here, and as I've said in previous videos, I think the market will maintain its choppiness over the last half of 2021 and into 2022. I guess investors are a little fearful that lower interest rates for longer is about to come to an end. Buy the dips. What exactly does that mean? Well, pretty bluntly, it means buy when things pull back. We always see corrections. Corrections are a very normal occurrence over the course of a year. And so whenever we do get these opportunities, whether they're market-wide or specific sectors of the market, a lot of investors have been taking advantage of these dips or pullbacks. So does the buy the dip strategy still work going forward? I believe it does. I think we've seen a number of dips in the tech space, in other sectors of the market. We have seen sell-offs based on potential higher interest rates and other reasons over the past few months. I think you can continue to buy these dips, especially with interest rates as low as they are and looking like they will stay low at least for the foreseeable future. So buy the dips is a strategy that I would consider, especially if you're an investor looking for growth. Recently, we've seen inflationary data run pretty hot. We've seen it rise significantly in the United States, and we're starting to see inflationary data rise here in our country. Investors are wondering, can they still buy certain types of investments to combat higher inflation? The number one investment that people have purchased for many years has been gold. When there is inflation out there, when they're considering the US dollar weakness, people then flock, or investors tend to flock to gold. However, this is a very risky investment. Just recently, we've seen the price of gold fall more than $80 an ounce in just one day. So definitely gold is an investment that you may consider, but definitely not for the faint of heart. Other commodities, whether they're lumber, wheat, corn, or anything in that space, we've seen these types of commodities really gain favor for investors over the past few months. Again, these investments are at high points as well, and we've seen them start to tail off over the last few months. Another type of investment that is higher risk. Lastly, Bitcoin. Again, we've seen Bitcoin fall off from the highs of 60,000 per US dollar all the way down to 30,000. Can we buy Bitcoin as a hedge against the US dollar and inflation? Well, I think it's definitely the investment of choice for the younger investor. However, once again, high risk investment. So if you're going to be an investor, or if you are an investor that's going to be investing in these types of vehicles, definitely understand that these names can fall and fall quickly. They can rise quickly as well, which is great, but you have to be willing to take a lot of the downside. And you have to be willing to say, this is money that I can lose 25, 30% of very, very quickly. This week's videos are there for all of you to gain some knowledge going forward over the next 5 to 10 business days. I'd love to hear from you. What are you thinking about? What questions do you have on your mind today that I can help with? Send me a message, give me a call. I'd love to hear from all of you and to understand what you believe is important for your investment dollars.